All right, traders, good afternoon. This is Christian from Hertz Tropical Trade Group, and this is your end of day video for Tuesday, September 28th. And it is my first day back from vacation, and it's always difficult to take vacation with the way the market moves, and I just seem like whenever I pick a time to take off, it's a volatile time, and certainly we had that the last couple of days, back and forth price action, some big rotations going on, and a lot of other moves just outside of just overall stocks as well. So I'll go over a couple of these things. I'll give you my outlook and a couple levels to watch for the day. All right, so risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. You can read the whole risk disclaimer here. And if the video is a little bit blurry, just give it a little bit more time because YouTube takes a while to render the high definition version of the video. Also, we have a member webinar today, so I just wanted to send out a quick video just because I haven't been around. I've been trading on location, which is always a little bit hectic to do. But let's go over some of these numbers, and then I'll just kind of give you what I'm thinking about this market and what some of the levels are telling me. So first of all, growth stocks really take a tumble. Let's do the overall performance. S&P was down right about 2% for the day. The Qs were down more, 2.8%. IWM down 2.2%. Was really kind of looking to see if the small caps could kind of take some leadership and break out of a range, but that certainly didn't happen, and they moved back down, and they underperform the S&P for the day. And then of course we have this going on. Big move in bonds continues, and that is also one of the headwinds, I would call it, that we have in the market. We certainly have seen that earlier in the year, and it doesn't take rocket scientists to figure out. The market does not like rates going higher, especially those growth stocks. And, all you have to do is look back to what we experienced in February and March, and you could see. And I think overall that move really caught a lot of traders off guard, that the market could do something like that, really correct in certain areas of the market. So I would not personally try not to get caught off guard again as we're seeing rates go higher, right? And also, the market doesn't. So why don't we start there with interest rates? I tend to look at ZB, which is the 30-year. You often see me tweeting this out, but you could look at TLT as well. I thought that we had a chance to kind of bounce on this VPOC. Now we may do that tomorrow. But for now, the market doesn't like these fast moves when things like bonds, when yields move higher like this. Remember, again, we're looking at the bond price, which is going lower. And when that happens, the yield goes higher. Remember, it's an inverted relationship when you talk about bond prices and yields. So, no kind of stop here. And during the day, like if you look at what TLT did, again, which is different duration, by the way, that was kind of hanging around like down 1%. I think it improved a little bit around like 2 o'clock, 2 o'clock, and it actually closed like right around the lows of the day. So TLT was down 1.56% for the day. So that's some decent moves. The other thing that I noticed is that there's another version point of control. You could see what happened yesterday when we took these things out. You had a hammer bar for a little while, for the session, and I was like, maybe that's going to put in the low, but you could see what happened thereafter. After we took that out, we did bounce a little bit. So the next level down is this 158.18, and I kind of think that that's where we're headed. Whenever we get this close to one of these version point of controls, I was hoping that we would just take the damn thing out. But again, I can't, obviously control things. But yeah, so keep in mind, we are not back to where we were, where we reached the low in March, but we are moving quickly, right? And again, I think that the market freaks out when you have this going on. If you want to see actual bonds here, I'll bring this up. In here, so you could see the rates. All right, but this is I think one of the major issues for the day. But you have the 30-year yield now at 2.09. That's a decent change. I guess that's a change of 10 basis points. I guess is what Bloomberg has here. But if you want to look at the 10-year, right, and we could look at I think we could look at yield. This one. Oh, if not, it's GY. I think it's actually GY. All right, so there's the spike, right, and I think that's freaking out the equity market a bit. I can't go back for a 10-year chart, but yeah. So there you go, and it looks like this level is actually higher. So I don't know why that is. Let's go back to US and we'll look at the 30-year. Right. Oh, maybe it's just not letting me go back that far. That's what it is. There we go. So here's the 30-year, and yes, you could see that level was, the yield was up to 2.4, but we're out of this range, right? Would you buy this chart, from a technical aspect? I would. You got a base, and you got a hell of a break, a little false breakdown here, and a move higher. So yeah, if I had a choice, if one of the gun to head exercises, buy or sell or do nothing, I would buy that break higher. So maybe so again, we're looking at these levels. If that doesn't hold, then there's another one down here at 157. But what was the level that I said here? Sorry, short-term memory. 150, 158.18, right? And if you don't see a bounce off of that, then we could be heading down to 157. All right, so that'll get things dicey if we get things down there. The other thing to look at too is UUP, right, which is the dollar, right? Look at the volume, by the way, in that today. Pretty strong volume, and so again, why am I looking at these things? Well, the market doesn't like a strong dollar either, right? When I say the market, I'm talking about equities. They generally don't like a strong dollar, and especially growth areas of the market don't like yields going up is what they're doing. So let's look at the performance. We'll talk about a couple areas of the market. But there really wasn't. I just highlighted like what finished the best on the day, which was energy, which gave back a lot of gains, and you have to kind of wonder with what's going on in the energy stocks. They did not finish on the highs of the day, and if you look at nat gas, which in the morning was up 10%. Let's see where this finished for the day. Finishes up 1.4%. So again, it's not a change in trend, but that's an awfully toppy looking candle, and we said that around 9 o'clock this morning during the TTG session. So after a decent move in nat gas, it does look like that the short-term top may be in. We'll of course keep an eye on that. Crude also finished down 1% for the day. So keep in mind 1, 2, 3, 4, 5 straight candles. Probably due for some digestion. I thought this was an interesting level too. If you look, we're right at this 74.75 level. We've stopped here before at 74.75. So this is going to be interesting. And I had a couple positions. I had Oxy going into today, and I took that off. I was looking at a couple things like Valero, but I just thought after a multi-day rally here, you got to be careful chasing these value areas of the market. Energy stocks, they just haven't been. Growth stocks, you've been okay a little bit here and there, chasing strength in growth stocks because they've been in good trends, but for the most part of the year. But XLE is not. It's very sideways, and if you catch it right out of this move, which is what we talked about in the weekend video that it was setting up. But I would not personally chase it here, even though it's possible that we could go up to 55. But maybe if this digests a little bit and put in some type of a bull flag, maybe it comes back into 51, 52. But I definitely trade value areas of the market, like energy, like financials, a bit different than I trade growth stocks. All right, and we could talk about, maybe we'll talk more about that in tonight's webinar. Again, a lot of areas went down. There was early on in the day, there was one of the cloud ETF saw some put buying. The semi ETF saw some put buying today too. Not a good look for semis. Where are they should be in here somewhere. They're down 4% for the day. That actually the worst performing ETF? That's not what, in my opinion, that you want to see. That's not bullish. I think that's the worst performing sector ETF. There were a couple other ETFs. I wanted to talk about this for a minute. The Ibd50 list. I talked about this a few times last week. This was outperforming during the beginning of last week's move, and then look at what happened. So I tweeted this out that it went from basically a hero last week, really outperforming and doing well, to a zero. Not good, right? And that was also not just the beginning of last week, but the end of the week. The Ibd50 ETF was moving very well. Now, I said that this was not something I don't invest in this thing. I don't really like the criteria that they use to kind of put names in. I think sometimes they're very late putting names in. But you can see what's happened here, down huge, like about 8-9%, and just the last 2 days in this. So now it's going to be interesting because you're just testing the breakout. But man, that's a rough candle. 5.4% in one day is nasty. And then when you lump the 2 days together, not great. ARK, might as well talk about this again. Just continues to see put buying anytime that people are expecting volatility. I try not to say anything too negative or too positive, because I know that there's a lot of emotion that's built up around the ARK funds, but it is what it is. This has been a very underperforming area of the market this year to date. If you want to look at the last couple of years, I think it's outperformed if you want to look at that data, but this year, massive underperformance. What's SPY up to right now? So sorry, I should have this in my spreadsheet, and I'll probably will put this in my spreadsheet going forward. But when you look at SPY performance year to date, up 19%, and when you look at this ARK fund, it is down 6%. So that's really nasty underperformance. So we'll move on from that, but that looks like a technical break as well. That's the lowest that this has been now for a few months. And so what else do we really want to talk about here? Just right now, it's a lot of trade management in September. We know that this is I think the hardest month of the year. October. I've mentioned that I would go through a couple levels. So even though as nasty as the price action was today, and this doesn't look particularly good, right? A move back up to the 50-day moving average, top of value. We tried to go higher and really got rejected in here. So where I have the cursor on right now is the 50-day moving average. So we're back below that decently, and we're very close to last week's lows. I would be very mindful that this level, this 43.40 level, gets taken out. We got a nice bounce on some progress of the debt ceiling, which is a complete waste of time that these guys have to do this charade of will they or won't they raise the debt ceiling. If they don't, the country will go into a tailspin. So the fact that they're even debating this is tells you how politicians are. If they want to make some changes so that the next time they don't get into this predicament, that's one thing. But the fact that they just keep passing the buck. They have no choice but to raise the debt ceiling. So, in any event, 43.40, I really want to see a bounce off that level. If we break below that, we've got some bad things going on here, because we don't have a lot of support breaking down here, and there's things like this that are in the cards. Now, is that unreasonable to think that we could go down here? Again, one of the exercises that I've talked about a couple times is look back at what happened last September and October. Right, kind of did the same thing. Not exactly. This is not exactly the same, but we broke down. We tried to kind of retake some levels. We took another leg higher. Note, again, this is kind of stretching a little bit further. This was stretching into October, where we rallied. We did not go a new high, and then we started to break down again. Now, again, a lot of doom and gloomers out here telling you that the market was going to have a crash or whatever. And then just keep perspective here is that after we corrected during a very weak seasonal time period, September, we went on to some pretty decent things after that. So that's kind of what I'm thinking, and I've said this a couple times, that we might spend some time backing and filling in here, but then we might have a really nice rally at the end of the year too. So, if sentiment really gets washed out. So those are the things to kind of think about, and I think it does make sense to run a scenario analysis and think about those things and what that would do to your portfolio. And again, what we really try to do is try to avoid not dig ourselves a hole when the market is doing things like it did today. Giving back a little bit of P&L, that definitely happens. I was down money today, but you don't want to have to be digging yourself a hole and giving back your hard-earned profit that you did, earlier in the year. So, all right, guys. So that's basically it. I'm not going to talk about too many stocks here. I always get questions like in the beginning of the day. Make sure that you're looking at. So the question being, hey, why is this name down? Or what's going on with INMD? Or what's going on? So you have to look at the whole group, right? If the whole group is down 5, that group kind of belongs to Ibd50 names, super high growth, or ARC. Look at the whole ETF, right? It's not just INMD, right? Because I always get the question, what's going on with this name? Or what's going on with an SE? Or, what's going on with this software name, right? It's just how it works, guys. The whole group gets hit on these interest rate moves. So INMD, I thought actually, despite being down, I don't know how you could say it held up well when a name was down like about 20% today, but it did hold its 20-day moving average. And it's important to kind of realize this chart. And when names go up as fast as they do in your trading account, you got to take profits. When names go ballistic to the upside, right? 130 to 180. You have to ask yourself, what else are you looking for? Are you looking for it to go up another 50% in another week? You could, but is that realistic? No, it's not realistic. And the right thing to be doing is to be taking some profits off. And if you trade options, you could roll the options, right? So what you do, for example, if you're in October options, well, you take the October options off and you roll out to a higher strike, something where you're investing less money, where you're taking money off the table, and maybe you're keeping a small piece on, right? But this is just trading 101. But I always find it interesting when traders are not thinking realistically at all. And I mean, this has been an amazing move for this stock, right? This stock was at $70 a few months, earlier in the year. It's at 149. Stocks are not really meant, and this stock isn't curing cancer, right? That's the other thing too. So, these things have been on an amazing run. We've talked about Upstart too. Right? They can't go up forever in a straight line. I mean, this was actually really good to see this thing only down 5.6%. But again, be realistic about where these stocks have come from. And if you're not locking any gains in, right, then you should not be surprised when you're, because again, these things will correct, and they'll correct harder usually than the overall market because they're higher beta, right? And if you're not familiar with that term, Google it, right? Beta, what does it mean? What's a stock's beta? Is it 1? Is it 2? Is it 1.5? Right? It's the sensitivity of the stock to the market. All right, guys, I'll leave it there because we do have a member webinar coming up. Have a great night, guys, and I will see you tomorrow. And again, it's okay to not be trading as much and to be watching. Or if you take, here's the trade blotter. I show it all the time. A couple things got stopped out in today, right? They just weren't, didn't look good to me, right? And if I'm more worried about things to the downside, I take some things off. We did have a nice Datadog trade today too. That worked very well. I like how it held. But again, I took multiple targets in the Datadog trade, and we'll see if it bounces, and if not, how it's been going. And you could look at some of the trades I got stopped out, and some of them are just like remainders of pieces, right? So for example, I think it was it yesterday or the day before where I got out of this trade, right? So I sold INMD once it started to move to the downside. Right? I got out of the in my trading account 176, paid 117 out of the last piece, right? And then you buy back cheaper. All right, guys. We'll talk. We can talk more about this kind of stuff, but that's it for today's video. Have a great night. See you tomorrow.